Welcome to episode 2 of Stock, Paper, Scissors. I'm Ben, and I am still buzzing from our last talk. Sitting across from me, looking much more composed than I feel, is Alex. Alex, please tell me you've had your caffeine fix, because I'm about to go off the rails a little bit today.
I've got my latte right here, Ben. And I can already see that vocal smile you get when you're about to drop a 5-minute analogy. We ended the last episode saying, here we go again, and looking at the markets this morning. Yeah, it really feels like we are going again. Everything I thought was a safe bet in tech is just bleeding.
That is exactly why we are here. It's the Great Migration, Alex. It's like, well, think of it this way. You know when a song is so overplayed on the radio that you actually start to hate it, even if it's a masterpiece. That's what's happening. The market is tired of the same 3 tech songs. It's looking for a new playlist. And usually that playlist is full of stuff your grandfather would have bought. We're talking pipes, oil, and grocery stores.
Right. You're talking about sector rotation. But Ben, it's hard for people, myself included sometimes, to wrap their heads around why anyone would sell a world-changing AI company to buy, I don't know, a company that makes cardboard boxes. It feels like moving backward. Why would the big money leave the future to go back to the past?
It's not about moving backward. It's about moving where the grass is greener. And by green, I mean money. Look, imagine you're at a giant buffet. Tech is the prime rib. Everyone wants it. The line is out the door. The price of that prime rib goes through the roof because demand is insane. But then people get full. They look over and see this incredibly fresh, crisp salad that nobody is touching. It's cheap, it's nutritious, and suddenly the salad looks like a much better deal than the overpriced, greasy meat. That's rotation. Money is like water. It always finds the path of least resistance to growth.
Okay, hold on. Slow down for a second. You're saying that because tech gets too expensive, investors just decide to go buy utilities? That feels a bit simplistic. Isn't there more to it? Like business cycles? I mean, I was looking at the relative strength charts this morning on my phone. Pass me the sugar, would you? And I noticed that when interest rates move, these boring sectors start acting very differently.
Spot on. You're hitting the nail on the head. It's about the environment. If it's raining outside, you don't buy a convertible. You buy an umbrella. Tech stocks are the convertibles of the market. They're amazing when the sun is shining and the economy is cheap, meaning low interest rates. But when the clouds roll in and things like inflation or high rates start biting, suddenly those boring, defensive sectors, the umbrellas, become the only thing anyone wants to hold. I actually have a stat for you that'll blow your mind. It's the gotcha moment of the morning.
I'm ready. Give me the data. I love it when you stop with the food analogies and actually give me numbers.
All right, check this. In the year 2022, not that long ago, right? The Nasdaq, which is basically the home of tech, was down about 33%. A total disaster. Most people were staring at their screens in a cold sweat. But if you looked over at the energy sector, just the boring oil and gas companies, they were up 64%. 64! While the world changers were losing a third of their value, the guys digging holes in the ground were having a party.
Wait, say that again? 64%? So while I was crying over my SaaS stocks, someone was making a killing on fuel? That's the part that hurts. It's the relative strength factor you mentioned. It's not just that tech went down, it's that the money didn't leave the market entirely. It just relocated. like it moved from one room in the house to another.
Exactly. It's a game of musical chairs, but the chairs never disappear. They just change colors. It reminds me of back in 2004 when I was obsessed with my Zune. Do you remember the Zune? I thought Microsoft was going to crush Apple. I was so convinced that tech meant innovation, and innovation always won. I ignored everything else. I didn't realize that sometimes the best investment isn't the coolest thing, it's the thing that everyone actually needs to survive a specific economic season.
You had a Zune? Oh, Ben, that explains so much about your trading style. But you're right. We get married to these ideas. We think tech is the future, so I must own tech. But the market doesn't care about the future in the way we do. It cares about the cost of that future. If the future is too expensive to wait for, the market buys the present. And the present is usually energy, healthcare, and consumer staples.
The present. I like that. That's a great way to put it. Look at the dot-com bubble. Everyone knows tech crashed in 2000. But what most people forget, here's historical stat number 2, is that from 2000 to 2002, while the Nasdaq was losing like 75% of its value, value stocks and many of those defensive sectors actually stayed flat or even went up. If you were diversified into different sectors, you weren't just surviving, you were thriving while everyone else was jumping ship.
It's hard, though. It's emotionally taxing to sell something you believe in. I remember a trade I made last year. I saw the rotation happening. I saw the money moving into healthcare. But I stayed in my semiconductor stocks because I felt like I was betraying my thesis. My stomach dropped every time I checked the portfolio. I finally closed my laptop and went for a walk because I couldn't stand to see the red anymore. I was fighting the cycle, and the cycle always wins.
I've been there. We've all been there. It's that overnight anxiety where you're praying for a green open just so you can break even. But that brings us to the golden rule of sector rotation. Are you ready? Write this down, or don't if you're driving. Pull over later.
I've got my notebook ready. What's the rule?
The golden rule is price is the messenger, but the business cycle is the mailman. You can look at the price of a stock all day, but if you don't understand where we are in the economic cycle, whether we're expanding, peaking, or receding, you're just reading the mail without knowing who sent it. You have to watch where the big money, the institutional whales, is moving their billions. They don't move all at once. They rotate slowly, like a giant cruise ship turning in the harbor.
So if I'm seeing my favorite tech stocks stagnating while my local utility company is hitting 52-week highs, that's the mailman telling me the seasons are changing? It's like the market is telling us to put on a sweater because winter is coming for growth stocks.
Exactly. And don't feel bad about wearing the sweater. Boring is beautiful when everything else is falling apart. That's the aha moment for most traders. You don't have to be right about the technology. You have to be right about the flow of capital. If you can spot which sector is starting to show relative strength, meaning it's going down less than the market or going up more than it, you found the new leader.
It's funny. We spent so much time in the last decade thinking tech was the only game in town. But looking at the history, these great migrations happen every few years. It's a natural part of a healthy market. It's just, it's painful if you're the last one left in the old sector.
Nobody wants to be the last one at the party when the lights come on and the music stops. I've been that guy. I've been the guy cleaning up the red cups while everyone else is already at the next club. It's not fun, but that's the beauty of Hedgd and what we're doing here. Learning to see the lights flicker before they go out.
Right. It's about being observant, not just reactive. I think the key takeaway for me today, and hopefully for everyone listening, is that diversification isn't just a safety net. It's a strategy. It's about having a seat in every room of the house, so you're always where the heat is.
Perfectly said. Don't marry a sector, just date it for the cycle. That's going to be my new mantra. Well, I think my coffee is cold and my brain is full. This was a heavy one, but man, it's important. If you're staring at a sea of red in your tech portfolio today, just remember, the money didn't disappear. It just moved. You just have to go find where it went.
And we'll be here to help you track it down. This is fun, Ben. Even the Zune story. I'm going to go look at some boring charts now and see if I can find the next leader.
Do it. And remember, this is all for your education. We aren't your financial advisors, just two friends in a coffee shop trying to make sense of the madness. See you in the next one, Alec.
See you next time on Stock, Paper, Scissors.